Jamesy, thank you so much for joining me on this session. We're so lucky to have you, and I always love getting you on for your insights and your wisdom. I think of you, I know our clients do think of you, and a lot of people elsewhere that are in Bitcoin and crypto as well think of you a bit of the Bitcoin seer or the on-chain savant.
Sherpa.
Yeah, Sherpa, yeah. The Aussie emu that knows
Yeah.
exactly what he's talking about. So the alpha you shared in our last session and the chat around breaking the 4-year cycle was really fun. And I think it was actually really on point in retrospect. But it gave myself, Joe, and our clients a lot of food for thought. And it'd just be interesting to get your take on sort of where we are in that realm a bit later on. But yeah, just wanted to mention, yeah, just how much value I get from your newsletters and the insight around the landscape that you give is it's just phenomenal. I listen to you on a lot of podcasts and I always learn something new. So thanks for always putting yourself in general and offering your time.
No worries.
And your newsletter itself, it's a must read every week. So, excuse me, for anyone watching this, make sure you sign up, whether you're a beginner, intermediate, or long-term investor. Make sure you get James's newsletter through Check on Chain. And we'll share the link in the description for everyone as well to go from there. Now, before we get into the finding out if we've bottomed and something I've coined the temperature check, which you feel free to run with that, James, if you want to use it in your own marketing, whatever, that's fine. Or
I'll,
when
I'll pay you the royalties.
yeah, pay the royalties exactly. We're here today, so that's it. I want to ask you some questions which maybe you don't get asked that much right off the bat, and I think it'd be really illuminating for a lot of people because I'm sure people just ask you about data. What are you looking at? All this kind of stuff. But I think it'd actually be really fun in reflection.
Hmm.
What were your main learning lessons from 2025 that you might carry through to 2026 and beyond? Was there anything that sticks out for you?
Yeah, no, really good question. So I think my general read on things, and it's not so much a lesson, it's more just a reinforcing what I already knew. First things first, nobody on Twitter has a clue what is going on. And I love that because from my perspective, in fact, I check Twitter so little now. I've deleted it from my phone. I just find that the noise there is out of control. And it's amazing watching people, they see the price fall and they go reaching for every reason under the sun. Why on earth it's going down? It's manipulated. It's the whales. It's
Paper
it's the
Bitcoin.
nasty paper Bitcoin. It's blah, blah, blah. And then I look at what's going on chain and I say, are we seeing a lot of sell side? I'm like, oh yeah, we're seeing an all-time high of sell side for 6 consecutive months. I don't need to look at sure, there's manipulation going on over here. Binance's market maker blew up over here. There's all these things. But I also see all-time high sell side that's like Sailor's monthly buy every Tuesday being sold into the market. I'm like, look, at some point in time, there's not going to be enough buyers to soak this up. So something that I've just really taken away and reinforced, the data is just so clear. And people will find some bias that they want to bring in to kick it out the door. Now, probably my biggest lesson of all of last year, there was a point, it would have been in mid-October. I think there was a piece I released on the 16th of October. So we've hit that first sell-off from 126K. We've had the liquidation event. We're about 6 days after that. And I released a piece called On the Cusp. And that was written by Check the Bear. It was the first time that Check the Bear emerged and goes, guys, there's a lot of things saying that this doesn't look so healthy. I think we're 110K or something. Anyway, what I then did is I made the mistake that everybody does. We all do. I went looking for someone else's advice, right? I went and not actually I basically said, well, here's my view. And I'm like, God, it really is bearish. And there's a part of me that was like, I don't want it to be bearish. So then I actually went going, well, what are other people saying? And what I should have done is go, I don't need to know what other people are saying. I need to do what I always do best and just trust my own work. So the lesson for me was more of a reinforcement of two things. People sell. And when they sell, don't go looking for narratives to justify why they're not selling. Just accept that they're selling and use that as your basis. And the second one, the moment you find, if you're someone who does the work, once you've done the work, you should be looking for reasons why you're not right. Once you've done the actual work, not trying to find someone else who's going to tell you that you're wrong. It's just a really clear, it's a good example of human biases that always creep in, no matter who you are, no matter how long you spend in data, your natural human biases of confirmation bias will always creep in, and you've got to actively fight it. It's such an important thing to do. I'm going in every single cycle now saying I'm not trusting anyone else's work, because I don't trust anyone else's work because I haven't done the work that they've done. I've done the work that I've done. I know my working, and I'm just going to stick with my own guns from now on. I'm not going to go looking for other people's opinions. I'm going to stick with my own guns.
Great share. And I think it's a tale as old as time, isn't it? You can look for a
Totally.
multitude of narratives, and in the end, it's just more sellers than buyers at a real simple high level view around.
Totally.
Yeah, yeah, no. Thank you for sharing. I think that's going to be really useful for people to hear. So, because we do have so many investors watching this that are veterans, intermediate, they've been here for a little while, but we also have people that are absolutely brand new.
Hmm.
I know I led with I really value your wisdom because you can explain things so simply. And you may have already covered this, but I'm just thinking, is there one key piece of advice that we could maybe share with viewers that may be a game changer for them if they're new to this space? You did say, cut out the noise, you're off X, which I
Sure.
think is probably really sensible. But is there
Yep.
anything else that you might think of?
Yeah, I think the biggest unlock for me and the backbone of everything I do with on-chain data
Hmm.
is its understanding herd behavior. So you'll hear this all the time. And honestly, markets are one of those things where you have to get wrecked at least once. You must pay your tuition. If you've only ever seen a bull market, you're going to think that you're a genius, and it's going to happen. You're going to get bitten. And honestly, you get bitten all the time. But every time you get bitten, you learn a little bit more and you get better. So, first things first, do not ever anchor to your losses. If you sold an asset and then it rips higher, honestly, when I like some advice on this kind of front, when you sell an asset, delete it from TradingView.
Hmm.
Come back in 3 months' time, make the decision and walk away. Doesn't matter what you're doing, just make the decision. If you anchor to oh, but I used to have this many shares, or oh, I really wanted to get to this many, or if you anchor to those things, you actually end up making decisions to try and achieve that thing, not allowing the market to tell you what it's doing. So, really understanding your own bias, understanding how that bias actually creeps into everybody else's behavior. And what I love about on-chain data, I can see when old hands, smart money, bear market floor buyers are selling. And I can see when the people who bought those coins at the top capitulate at the bottom. What is the right thing to do? The opposite of the crowd. The vast majority of people do not do any work, and they just vibe buy, right? They just vibe buy and then vibe, and they don't sell. They vibe sell usually at the bottom. And on-chain data, in my view, it's a study of people doing really smart stuff, a small number of people doing the right thing, and the vast majority of people buying high and selling low. And for me, I want to be the opposite, right? If I'm going to be the smart money, show me when the dumb money is buying way too many coins at an expensive price, and I'm going to wait. I'm just going to wait for them to all sell at the bottom, and they do this religiously. Then I'm going to step into that. So you almost use this data to just flip everything around and look at things from the opposite direction, knowing that if you can separate yourself from your bias, everyone else will not. So you're just going to do the opposite of the crowd.
Perfect. Yeah. Look, being in Bitcoin for a few cycles myself, I think you understand that it's a patience game. You're
Totally.
battling yourself all the time, and what you said before is very interesting because we talk with a lot of investors that maybe want to amplify their returns by leveraging and also
Going
going
out the
into the
risk curve.
altcoins. Yeah,
Yep.
going the risk curve and leveraging up on altcoins, which are already highly volatile, highly risk assets, and you you lose big, and then you want to make that loss back. That's
Totally.
your framing from that point. You go, I lost X amount and I have to make that back. And it leads to unforced errors. And the beauty about Bitcoin is it's one of those stepping back, longer term vehicle where you can store your time and your wealth. And when you look at it from that point of view, it becomes very clear and peaceful. And it's almost like you have to go through that pain of a few cycles of making those errors where you can just sit there like that monk and sit in those very heavy waves and storms, and it's like it's nothing. But I
Yep.
think that people do have that shorter term mindset which can really cloud your decision making and create those unforced errors. So yes. One more thing. Yeah, you did say you went off X, which is probably why I'm not seeing you much there
Hmm.
anymore. You deleted off your phone. You may have times and opportunities where you dive in and maybe do a post or two, which I think is really sensible to manage your time and your mental energy. But what do you think is something that everyone is overlooking now, whether it be in markets or at the macro, something that affects just something that's maybe in the back of your mind that maybe not
Yep.
someone's not thinking about. Is there anything? Hey guys, Sam here. Hope you're really enjoying this session. More to come shortly. Just wanted to quickly jump in because I know a ton of investors have lost money in 2025 doing all the wrong things. This includes not operating from a place of power, no data. Think on-chain, think ETF flows. No strategy either. Not learning how to become a 360 investor or knowing when to be offensive and when to be, importantly, defensive, which we've seen. No community. We have over 3,000 clients that have been there and done it all before, which you can learn a lot from. So if you want to learn more about our proven 5-pillar program that we've been using for the last decade that's netted over $56 million of client profits, make sure to click here to learn more about that. Okay, back to the show.
Yeah, totally. I think the most interesting thing right now is how gold's at all-time high, silver's at all-time high, stocks are at all-time high. Choose your asset. They're at all-time high. Bitcoin isn't. And what I think is so interesting is watching all these Bitcoiners basically feeling like Peter Schiff. So like the thing that I find so interesting is like, and because like gold's my second biggest holding, at 10%, 90% Bitcoin. That's I'm a simple dude, and I just buy scarce coins. And basically, what a lot of Bitcoiners are feeling right now, this like FOMO about gold, this FOMO about silver, is hilarious because, like, guys, that's exactly how the world has felt for 17 years about Bitcoin. For 17 years. The feeling we're feeling right now, just translate that. Like, we've had 17 years. Eric Balkunas from Bloomberg had a great line. He's like, you guys had 2 years of like double the Christmas presents of everybody else. And then in 2025, you got coal, which, by the way, was down 5%. You know, like that's coal for us. You're down 5%. Like you gave back what you earned at the start of the year. Like, chill out. And I think that's a really good framework. Like, sure, 2025 didn't adhere to most people's expectations, I would say. But at the same time, it's like when you actually just take a step back, put things in perspective. And honestly, one of my favorite metrics right now is just looking at the ETF, like cumulative flows or AUM in Bitcoin terms. Quick snapshot, price is down 35%. AUM is down 3%, 3%. And if you look at the dollar flows, like cumulative dollars in and out, it's down like 8%. So like you've got a 35% drawdown in the price, and you're telling me that like 3 to 4% of the coins came out. We don't have a speculative pool of people who are just here for the up times. Like, there's a lot of buyers who are really invested in this thing. So like when you really take a step back, it's all good.
Oh, 100%. Yeah, Eric's tweet around just putting things into perspective. I remember seeing it and how gold was up X, all the other ETFs were up X, Y, and Z, but then Bitcoin was like down, but the flows were enormous.
So like top six ETFs
okay,
in the world.
Exactly. So the divergence there, you're like, okay, well, this is just platforming. Whatever this is an accumulation. Just be patient. But the signal there is huge. But I'd add to your point, which you said before, is, what is everyone overlooking? And I think this year is a lesson in you, like myself, are a bit of pirate. There's a bit of pirate in us. We love to collect physical silver, gold, maybe some other precious metals. And I talk with a lot of investors now who wish they had looked at their entire wealth position and actually thought a bit more through it and gone, okay, do I have 100% of my wealth in Bitcoin and crypto? Can I deal with that volatility? Can I deal with the speculative nature of, certain aspects of the market if I have X amount of my wealth here and not out as well? Because ultimately what we're seeing right now, Bitcoin had a flat year, crypto just got smoked, while gold, precious metals, equities are flying. Ideally, you want to be looking at a portfolio that can weather a storm. One part might be up one year, the other part might be a bit down or flat, and you can sleep at night. And it's looking at that longer term picture. So I think that's what a lot of people overlooked and have adjusted and tilted. And I'm really impressed with our investors that are probably watching this now. So I wanted to share that, mate. No, thank you for your thoughts around that. And
and just one more thing, like people ask me, like, why Bitcoin is like, why on earth would you own gold? It's not going to beat Bitcoin. It's like, well, first of all, I don't buy it to beat Bitcoin, but right now, this exact moment is exactly why I hold gold. Why? I'm saving for a house. I don't have a house, right? In Australia, that's my inflation rate. That's the thing I'm saving for. So from my perspective, what happens if I view gold and Bitcoin, like gold is there to give me the deposit when I need it. If I had to go out right now and sell a bunch of Bitcoin to get that housing deposit, I would be kicking myself. And in fact, it would impact my decision to go and buy the house that I want because I know Bitcoin's going to do much better. I would hate to sell it here at 97K. It would kill me to do that. Gold, it's doing exactly what I need it to do, which is not being down when I need to, like if I need to sell it tomorrow, I can do it. So the literal reason why I bought gold is to do what it's doing right now, which is not go down as much as Bitcoin. I don't care if it goes down 20% because it's still going to be just fine. So from my perspective, that like anchor in my portfolio, it has a very specific job. And right now it's doing it just fine. It allows me to wait and give my Bitcoin the time it needs to run. That's how I think about it.
Yeah, incredibly sensible. Like you, I think Bitcoin has the digital two sides of the same coin, digital and analog. You got gold and Bitcoin, two sides of that same coin, and it's just sensible portfolio management in my view. So, yeah, thank you for sharing, mate. Let's get into your temperature check. If you wanted to maybe share some thoughts or some slides on where you think we're at, we can maybe yeah dive through it.
Yeah, I mean, I don't have any specific
Okay,
slides, but I mean, maybe if there's particular topics of interest, and I can certainly
yeah,
pull up any charts I think are relevant. But in
sure.
fact, maybe I'll just start with a
I
view
had
on.
some thoughts, if I can share them, and maybe we can
Yeah,
run through them.
please.
Yeah, absolutely. So I use we use your dashboard, your hodler dashboard,
Oh,
all the time.
yes.
And I just maybe wanted to frame the session through that lens is I'm seeing it, and I watch Capriol's ETF flows as well. Like you're saying, you watch the far side and investor um, ETF flows come through. And this is, to me, this is a very institutional driven moment in Bitcoin's history where if you look at the ETF era of performance, it sort of starts pumps, 30% correction, pumps, 30% correction, pump. We're in that sort of nasty correction moment. And I think, yeah, the hodler dashboard is very interesting because it does show signs of recovery. And there are a lot of signs of recovery. As we've had a very nasty moment of capitulation across multiple cohorts. And now we're really beginning to pop back up. Is that your read when you look at this dashboard?
Yeah, so let me just go. I might go left to right here because it'll give
Yeah,
a bit of
sure.
a framework. So this is my just like general view of the Bitcoin price using some just really important on-chain models. So if I'm going to frame this thing up, let's go bottom to top.
Yep.
The purple lines down the bottom here is the 200-week moving average and the realized price. So this is where Bitcoin has historically bottomed in a bear below these levels. So all the bears out there, this is their target, somewhere down to like 56K. To give you a bit of context in where that would sit, we're basically getting to the bottom range of the 2024 chop. So that's where the bears, if this bear cycle looks like previous bears, this is the target. So
Mm.
that's kind of working bottom to top. Now, this interesting looking model here, which you can see has caught the bottom in our current environment, and I might just pull back to 2022 because I think this is important context. Let me get rid of the lower bound prices. So this blue line here is called the true market mean. I won't go into the deep dark on-chain magic for it, but basically it's the average cost basis for active investors, people who are actually mobile in the cycle. The short story is it's the average cost basis getting rid of Satoshi and lost coins and early miners. The longer a coin has been dormant, the less we care about it. The more active it is, the more we do care about it. Now, if we notice here, here's our, in fact, there was two levels. In 2022, we had this mid 21 sell-off. In my opinion, this is the sell-off that started the bear. I know we went to an all-time high, but sentiment on every possible metric was just dead and buried on this rally higher. So true market mean, it is statistically in the middle of the Bitcoin price. We truly do oscillate around it. In my opinion, it is the best mean reversion model. So it caught the bottom in 21. And then this, if you look at this 2022, start of 22, we've had our sell-off from the top in October, November, into the start of the year. We then had what can be considered a bear flag. Let me just get rid of that model, and that model for simplicity. And then we've come up and retested the short-term holder cost basis. So this is the cost base for people who've bought in the last 5 months. People who bought in the last 5 months matter a lot because that's where our recency bias is. That's where people feel today, like in their recent history. And this is where they're going to anchor their decisions. I like to use the example of the Mount Gox people. They bought their coins at like $200, $50, $10, but they got them back at 68,000
Yeah.
and the market immediately went to 49. Do you reckon they felt good when it went from 68 to 49? They don't know that they're only up like 645,000% anymore. Like they're not thinking about that. They're thinking, damn, I could have sold it for an extra 20 grand. So recency bias is a very real thing. So we've sold off to the middle, we've rallied back, and then we've had a bear flag that's retested that short-term cost basis. We've had our sell-off, and this you could argue is a bear flag that is in the process of retesting that short-term cost basis. So if I just give people a bit of a framework for how to think about this current market, this rally is really nice, but it's also a bear flag. So we've got to hold this like double perspective, and we've always got to keep two things in mind at the same time. This is a bear flag that is retesting the exact level that should be serious resistance. So now let's flip that around and say, well, what are our conditions? If we can clear the short-term cost basis about 98K, and it's not a perfect level, it's a zone of interest, now the bears are on the back foot. So right now, this is the point in time where the bears are going to say, I ain't letting you go higher than this. They're going to step in, they're going to do it. This is where the supply is going to come in. The question is, do they have the juice to actually cap this market and push it lower? So if we look at what those short-term holders are doing, MVRV is basically their unrealized profit or loss. So think about this chart, this MVRV and SOPA, they're actually sister metrics. MVRV tells you how people are feeling. What's their portfolio number doing? And right now, everyone who's bought in the last 5 months, on average, is at break even. So we're like on that midpoint between sentiment might be so back, but if we sell off from here, it's so over. We're on that tipping point. So it's been so over for the last couple of months, and we're on the point where if it goes to 105, it's going to be so back, right? So we're on that real cutting point right there. SOPA is telling us what they're doing. So this is how they feel, and this is how they're behaving. So generally speaking, when people are in profit, they take profit. When people are feeling really bad, they capitulate and they take losses. Now, SOPA is a bit of an interesting one because it has a very defined pattern. In bull markets, it's mostly positive. People take profit in bulls, and we get these short, sharp V-shaped undercuts of one. Because the truth is, someone always buys the local top and then sells the local bottom. So this is kind of describing the fast money doing the wrong thing. I would argue this short, sharp pattern. Now, again, we're at a real key decision point. In bulls, mostly profitable, short, sharp undercuts of one. In bears, it's the opposite. Most of the time it's red, and we get short, sharp nicks above one because people, when there's any profit to take, they're taking it. So I would say right now we're on that threshold of but right now people are buying the dip. This to me looks like people are buying the dip, but we could be seeing the first signs of people selling the rip. So we are very much on that decision point. And the truth is, no one knows how this plays out, but we're looking for that like inflection point. Now, funding rates is the other one that I like to compare to these things, because funding rates is basically like if you plot SOPA and funding rates, you can kind of see they're the same chart. So one is purely on-chain, one is purely derivatives. I'm not seeing a huge amount of like excess leverage, right? Funding rates are fairly calm. So I'm actually not too concerned about people being excessively long. That's all good stuff. And the last one is the ETFs. So ETFs also looks just like SOPA. They buy the most in the bull, and then we get a period of capitulation where people get flushed out. They buy the most in the bull, and then we get a period of capitulation. But here's what I think there's a really important insight that goes beyond just looking at the ETF flows, because I would say that we've had a period of outflows. This is about $6.5 billion in total. And we finally got about $1 billion inflow on yesterday. But let me have a look at this chart. So the green line here is the ETF flows over the last 30 days. So it's basically like the 30-day flows into the ETFs. The yellow is the 30-day change in CME open interest on the futures market. So to me, if you did not look at anything to do with the futures market, you would look at this and go, oh no, people are bearish on Bitcoin, they're selling spot via the ETFs. And then I would say, well, it kind of looks like people who bought the ETF and sold the future coming into the end of the year in December, did some window dressing. They closed out their delta neutral arbitrage trade so they could say, look at our healthy P&L. And now they're restarting their trades again. So this to me doesn't strike me as I want to get out of Bitcoin because Bitcoin's terrible. This strikes me as I've got a mechanical P&L statement that I need to dress up for December, and then I'll rethink about what I do in January. So it's not this to me doesn't strike me as a sentiment driven thing. This is a mechanical, structural, plumbing type thing, as a bunch of hedge funds come in and out of positions that they really don't care about anyway. So they're just here to make money. So that's the way I would think about things. And like broadly speaking, I mentioned this earlier, and I'll shut up after this, but If we look at the total Bitcoin in the ETFs, it went down like 3%. Like, the total outflows is basically what happened on the all-time high pump. So the people who bought the Pico top got flushed out, and then everyone else is like, oh, I'm just going to sit on my hands and do nothing. So like this to me doesn't look like a chart of flows that's people going, oh, Bitcoin's dead. I don't want to hold this thing ever again. Like this to me looks like I kind of like what I own.
Correct. Yeah, I think this is a classic case of higher prices lead to higher prices. Momentum leads to more momentum. And I think that 100K level, basically, you can look at the short-term holder cost basis. It's funny how it all lines up, but you've got 50-week moving averages, all that kind of stuff. But 100K is the level. And I think we're still in this sort of malaise a little bit with the 4-year cycle. There's some of that baggage that's overhanging, which we need to shed. And my sense is that I think we are in a completely new kind of era, and that's just my hypothesis. But bulls need to step on the gas. They need
For
to
sure.
actually prove. They need to prove it. But if we can get above 110, get to a new all-time high, it's like this weight is lifted. This invisible weight's lifted off the shoulders of the market
Yep.
for a multitude of investors and reasons and onlookers. And suddenly we go, wait a minute, this is supposed to be the bear market year of Bitcoin, and it's making your all-time high. What gives? And you're
Yes.
seeing, maybe gold start to roll over. You're seeing flows beginning to move, and gold, I think still goes up in dollar terms, and same with silver. But is it going to be the fastest horse? And we've heard a lot of narratives about, okay, when gold stops and slows, it goes into Bitcoin, and I actually think that does play out. It's just we are sort of on a different time horizon here, a different time frame. I don't know what you think about that, but I think a lot about that 4-year cycle and it breaking and all that. But I think 2026 presents a lot of new challenges, but also potentially a lot of new optimism, which I feel. I don't know how you feel about
Yeah,
it.
yeah. So my base case for a long time actually has been that the bull market will look the same as the previous bulls, but the bear will not. So I do consider us to be in a bear market, but I don't think it's going to be a bear market like all previous bears.
Mm.
I mean, every metric you look at, you can easily describe the bear market. It's much harder to describe the bull. But at the same time, this bear, so fundamentally, it looks like a bear market. But in terms of the deviation, how far below the all-time high, how far below the short-term cost basis, how far below choose your weapon,
Mm.
the deviation is a dip. This is what makes it such an interesting dynamic. It is a bear market that looks like a bull market dip. And I would just argue, so let's just think about this. And then I'll talk about this chart because this, in my opinion, this is the main character of 2025. And it's no longer the main character of 2026, which is what makes it interesting. So in my view, the behavior of Bitcoin, right? How people are actually trading this thing. I actually don't think we need to worry about gold and like one of my unpopular opinions, which is strangely unpopular, is that you don't need gold to hit some kind of a ceiling for Bitcoin to do well. I don't think that silver has its own supply and demand problems. Like it's just an asset that has a deficit. Gold, you've got sovereign nations who are piling money into it. Bitcoin's just not big enough for that. But at the same time, like you and I know, as gold, like I know I own both gold and Bitcoin. Bitcoin's better in every possible way. And like you can't convince me otherwise because I use both of them. And like, yes, they have their pros and cons, but like Bitcoin's just better in every way. So I think there's that perspective of like gold has to stop going up for Bitcoin to do well. I think Bitcoin's going to do just fine of its own merits. But the overhang that we've seen, and you mentioned 100K is like the level, 100%. So this chart here, in my opinion, is the main character of 25, and it just contextualizes everything. This is looking at all coins that are older than 6 months, which we call long-term holders in the world of on-chain data. People love to argue with me and say, that's not really a long-term holder. It's like, yeah, it actually doesn't matter because the statistics of UTXOs and just the way they move shows that when a coin's older than 5 months or 6 months, the probability of it spending any day just drops to insignificant levels. So like, what's the difference between 0.001% and 0.0001%? Nothing. It's practically the same thing. It's not going to happen. But when it does happen, it's usually at the March 24 peak, the November, December 24 peak. And look at this monster of a mountain. The amount of coins that came back to life in the second half of 2025, people wonder why the market started curling over. And I would say it's probably got something to do with the increasing volumes of sell side that just kept coming and coming and coming, and it just wouldn't stop until now. So the main character of last year, has been this kind of curling over a price, massive, tremendous amounts of sell side. Now, not like just because the sell side has declined does not mean that the guy who bought up here is going to sell to someone else and then they're going to sell to someone else. It takes time for the coins to find a cold card to get finally taken off the market, but they will. Eventually they will. So the immediate sell side has come off a cliff. And what I think is the most interesting question, you mentioned like this 4-year cycle, the bear doesn't look like a bear, all of these things. Let's imagine we go to all-time high over the next 6 months. The 4-year cycle is in the bin. And I just ask people, are you going to reset your chart where like this bottom was the same as FTX or COVID or the 2018 bottom or 2015? Like, is it the same thing or is it a super cycle? And they're not going to know. And that is, I actually agree. I think Joe Calasari said this recently on a pod with Danny. He said, we actually need this. And I fully agree. We need to kill this 4-year cycle so people stop thinking it's so predictable, because then people can actually just look at what's actually going on, which in my view, that's what I do. I try to look at what's actually going on. And I don't really care where we are in the 4-year cycle. I know some people will look at it, but it doesn't change my thinking about anything. This to me, yes, it occurred on the 4-year halving cycle schedule, but to me, this is what killed the bull. It's not because we hit 4 years, it's because this happened. So from my perspective, I think people will get lost in the bear. And one last thing I want to just note, if we go to another all-time high, what I think is so interesting about that event, you can't blame it on retail adoption in 2017. You can't blame it on excess stimulus in 2021. You can't blame it on the ETFs going live, and you can't blame it on Michael Saylor. If we go to another all-time high, the critics are wrong in every possible way. There's still reasons they can find, oh, it's underperforming gold, or oh, it's this. If we go through another all-time high, the critics are just out of ammo. It's just over for them. So I think that's actually going to be a very important all-time high because it's in the fully matured institutional ETF. We've had the treasury company thing come and go. Like, once we get that next move, I just think critics have got nothing left to stand on. And that's a really exciting prospect for me.
I completely agree. And you raised a really fascinating point. I think it was towards maybe Q4 2025 when things maybe weren't shaping up as everyone thought. And that's another thing as well. When everyone's sort of pinned in one narrative and a thought process, Bitcoin humbles all, really, that I've seen. But these OG whales that came into the market, it was, the buzz sort of phrase, you framed it in a way that was positive. And I loved that. Around 90,000, 100,000, you sort of gave a range, like, if we go here, I've got probabilities, and that's how you need to look at it. But maybe the signal through the noise is that the absorption of these OG whales and Bitcoin hitting the market at around that 100K, 90K, 80K, it doesn't matter. If you're a long-term investor, you don't give a shit. What you care about, I guess, is the platform that's building for the long term. But that distribution on the market, the absorption, the health, the strength of the buyers underpinning the market. Yeah, I think that is probably the big signal here, is that
70% of all the dollars ever invested in Bitcoin was above 90K. And like that's not, we're not talking about like small retail pocket money anymore. Like we're talking about hundreds of billions of dollars. Serious. I mean, old mate sold 80,000 Bitcoin. Granted, at the top, good for him. He sold 80,000 Bitcoin for like 9.6 billion. And like, imagine holding 9.6 billion. I mean, it wasn't at the time, but imagine holding $9.6 billion worth of Bitcoin. And by the way, that may not be his only clip since 2010. Like, what a move. And like, if you think about that guy, when could he have possibly sold 80,000 Bitcoin ever in Bitcoin's previous history? Like, you don't just like walk out with 150 million, 2 billion, 9 billion in your bank account. If you did that in a previous administration, you would have had the feds like on your doorstep in the next 10 minutes. So it was the first time in his entire Bitcoin journey where he had the size, liquidity, and market depth to exit, and the regulatory situation wasn't to the point where he's going to get arrested and they're going to question where did the money come from. It's like, I've just long Bitcoin, man, from like a long time ago. So like he's had the, like, it's estates. That's the other thing. Bitcoiners are getting older. We've got like in our home building years, a lot of my clients are retirees. There's just a lot of people who have reached a point in their journey where Bitcoin has done what it needed to do for them for some portion of their holdings. you know, people sell for all sorts of reasons, and we're in this like estuary where the wild west of individuals is starting to give way to more of the institutions. And, you know, a lot of people, you know, if you're a retiree and like you don't want to be handling self custody, the ETF is so much better. So if you get your parents involved, it's just sometimes easy to put them to the ETF because they click a button, it's in their same brokerage account, they don't have to think about it anymore. There's so many reasons why there's like a changing of the guard, a rotation of capital. And you get these things take time. It's just a process.
Yes, 100%. And it had this happen, a couple of years ago, it would have sent price down to the 200 week, if not
No, it
more.
did. It did. The last time we saw 80,000 Bitcoin sold, it was when Luna imploded and we went from
Yeah,
45K down to 15. So,
yeah,
you know, that did happen and it was horrible. This time it
yeah.
went down 3% and then recovered immediately.
Yeah, so and for that to happen now, obviously for us to have these 30% drawdowns, which seem to be the norm, and again, you don't want to get pinned in a bias, but until we begin to lose at lower levels, and unless another massive seller comes online and unlocks, I think the market's in a really good state. But it doesn't mean that we're going to go all-time highs anytime soon. I think, like we were saying before, the market has to prove itself, but
Yeah,
the platform for this market, I think even over the next 2 years, and if you are, and we can dive in a little bit of macro here, but the overall liquidity cycle thesis is an interesting one. How that does permeate through Bitcoin and crypto, and how it kind of did align over the 4 year cycles here and there. But Bitcoin is its own beast, and it will do what it wants to do when it wants. And also, gold's going up for a multitude of reasons. Yes, central banks are buying, but it's also geopolitical risk. There's never been
sure.
a more uncertain time in probably when we've been alive, right now. So this is uncharted waters. I think we said it in our last session. It's uncharted waters. We'll find out the 4 year cycle if it plays out again. No one knows what's going to happen, but it makes sense that Bitcoin will not stay down forever here. It's coiling. It's building for something big, and I'd be very surprised if it goes lower. But if it does, it does. We buy some more. Um, was there anything else you wanted to add around that, mate, at all, or would you like to?
No, I generally agree. I think you've got to look at the world. Every asset has its own supply and demand dynamics. If you think about gold, it's the inverse of treasuries. Treasuries have lost their bid because the US froze Russia's reserves. Every country in the world is now saying, well, what if I get on the wrong side of the US? They're starting to move, and just like gold's the only other asset that's big enough, large enough, and ugly enough for them to put sovereign style money in. Silver, like most industrial metals, and I do think silver's mostly an industrial metal, it can have like the extra burner of people going in there for investment demand. But like silver's just got a supply and demand deficit. Platinum's got a supply and demand deficit. Yeah, it's just it's a metal that's just like not produced as much as we need. It's being used more and more in circuits and solar panels and all this kind of stuff. So, and by the way, the silver bugs have like they've grown silver hair waiting for this to happen. So it's like this is a 40-year long process for them. Give them a couple of days to just enjoy the market going up for once, because it's been a widowmaker trade forever. So I think the precious metals have a certain angle. I wrote a piece at the end of the year, or maybe start of this year. One thing I think is going to happen is the US market is not, I don't think the US is going to outperform rest of world. I think we're moving into an era where rest of world's going to do much better. This actually happened in 25. A lot of people look at the S&P 500 and the NASDAQ and be like, oh yeah, kicking ass, plus 17%. It's like, yeah, but did you know that the African stock market was up 50%? Did you know that the German stock market was up 35%? Like all these other markets are doing much better than the US. And I just think there's going to be an exiting of capital over time. I think the US dollar is going to be weaker relative to other currencies. I think we're just seeing other stock, I mean, whether by mandate or by choice, if you're in Europe, they now have to go through this whole process of the US is backing away from NATO. They're kind of saying, hey, Russia's your problem. You deal with it. So now the Europe's got to like rearm. That's a whole thing. They're going to want to repatriate capital because this is what bankrupt governments do. They say, well, you must invest here, Mr. Pension Fund, Mr. Bank, Mr. Regulated Institution. You got to bring money home. Japan, rates are no longer zero. So the Japanese are going to start bringing money home. And what do all these people have in common? They own US assets today. So how do they finance purchases and investments at home? They sell their savings, which is US assets. So I think the US market is going to underperform the rest of the world. And really gold and even Bitcoin, just as a global asset, they're a bet on the rest of the world because they are global assets that have a currency pair in every currency. And really, let's just also think about how remarkable this is. Bitcoin's 17 years old,
Mm.
has been hated for a very long time by most of the system and the establishment. What 2, 3, 4 assets have a price in every fiat currency? Gold, maybe silver, Bitcoin, and the dollar. So it's one of like 4 or 5 assets, oil, even oil, oil's dollars. So like it's one of 4 or 5 assets in the world that has a global price. And this is just not true for literally everything else. You know, like Tesla doesn't have a price in Australian dollars. It just doesn't. Everything's in US dollars. Bitcoin has a price in Australian dollars. Bitcoin has a price in Nigerian naira, has, in pesos, whatever. It is a global asset available everywhere. And I certainly view Bitcoin as like the gold for individuals because yes, individuals obviously can buy gold, but it's a pain in the ass, honestly. And I've thought about this recently. It's a risk I didn't actually consider. I didn't consider when it comes time to sell my silver that there's going to be lines out the door at the bullion dealer and I have to line up for 6 hours. I didn't think about that. Bitcoin, gone. Sold immediately if you needed to. So it's just a whole different animal.
It's wild, isn't it? I know those things that you don't think about, also the spreads and different things like that at the end of it. Yeah, look, I think the pathways are aligning. We're seeing an accelerationism in geopolitics, and also I think what we see in Venezuela and just how the chess pieces are moving for what Trump's doing. It does feel like there's a race for resources and energy from the big superpowers. And in my mind, gold makes so much sense in the traditional aspect.
Yep.
Bitcoin makes so much more sense where we're going because decentralized 24/7 global asset. If you're one of these countries like, and I have no love of the Venezuelan government, but if you're looking at what happened there, Trump decapitation strike, Delta Force, in and out, countries over, it now belongs to the US effectively as a proxy state. Uh, Currency, debt, all of it, it's non-existent. And the same if Iran, there are Iranian fiat currency right now. If there's a strike there, I've seen the Iranian currency is going to zero across the board. Bitcoin makes all the world of sense here to have a decentralized asset in that mode that no central government, any one entity can censor or send in Delta Force and take. I think that angle hasn't played out yet. Gold may be already responding to that in the traditional sense. And maybe there's been that idiosyncratic issue with the Bitcoin market. And maybe it's not a maybe. We've had those OG whales and maybe some shindiggery with the 1010 issue with the auto deleveraging through. And maybe that's an interesting question for you about 1010, October 10th, with the auto deleveraging
Yep.
via Binance. Was there anything in the data that showed you maybe how deep a cut? I know it didn't really affect Bitcoin at all, but it did. I think it destroyed the altcoin market.
Oh, for sure.
It ripped the heart out of it. And I think Mike Novogratz from Galaxy Digital said 30% of market makers were wiped out on that day.
Yep.
It does seem there's been a systematic sell of everything
Yes.
since
And
that
Bitcoin's their
point.
main asset, so they're going to have to sell that as well. Yeah, no, and look, trying to understand where the bodies are buried and all of that. I just can't basically boil it down to there were many. And for the crypto side of the equation, honestly, I've been skeptical of alts for a long time. I have a feeling that could have been an extinction level event for a large part of the market. I just don't know why anyone would think alts are going to come back because I just think retail has had enough of the grifting, of the scams. And the problem is even if there are projects out there that are trying to do the right thing, it just all gets lumped into the same thing of like, I'm going to go and speculate on Tesla. I'm going to go and speculate on Nvidia. I just think that the industry failed to mature in a way that's going to, and then you get the liquidity get wiped. I mean, some of these tokens literally went to zero. So what I think is interesting about 1010 is we didn't get any new retail inflows this cycle because frankly, alts didn't do well at all. So there was no kind of inflow of new people. There was a meme coin season, which nuked everybody. Everybody who was around and levered long on 1010, the last people in crypto Twitter who survived the most bearish bull market they've ever experienced after the 2022 bear market. So they've had the 22 bear, Bitcoin's gone to all-time highs, everything got slaughtered whilst Bitcoin went to all-time highs, and then finally goes to 126K and they go, this is it. Finally, it's coming. And they go levered long, and then every token they own literally goes to zero. No one survived that event. So the survivors are like, I'm done. I'm chucking in the toys. So then you're just like, who's left? There is no one left. So I'm I'm so bearish on alts, man. I can't convince myself that they're coming back. I just can't. I'd love to hear the good case for it, but I'm just done with. Like I've been done with them for a long time, but like mentally, I'm like, I just think it's over.
I'm in the position which prices will tell me if they're back, and if they don't, they're not. But yeah, like that really the clothes fell off the emperor a little bit on the market, where you see that okay, if something like that happens, the systemic risk of maybe a few massive market makers like Wintermute and others, which maybe are holding the prices of a lot of these tokens that
I was going to say
with
what you
very little
discovered is that
outside demand.
there's
Yeah,
no bid.
yeah, there's no bid. And yeah, so some things can go down 70, 80% in a flash if no one's there to buy it. So
Yep.
yeah, it's a very interesting point. But was there anything in the data when you look at Bitcoin, for example? Can you see Wintermute? Can you see some of these others? Was there anything
No, that's
like with it? Is there a panic selling or anything like that in that regard?
no. I mean, look, there's a process of going down to like the forensics of this stuff. That's what your chain analysis and things do. Like in my view, there's very, very little edge. You will spend countless unretrievable hours trying to work out who's who on the chain. I'm of the view it just doesn't matter. Like from my perspective, and when I wrote on the cusp on the 16th of October, I was just like, look, momentum across all these metrics is slowed. We hit two all-time highs and we've now failed. We're down below the short-term cost basis, which is the first line of defense. When you just put all these things together, it's like it just doesn't look good. It just doesn't look good. Right. So if you can make that call like 110, so like guys, it doesn't look good. And from that point, it goes, look, first line of defense is short-term cost base. I think it was 110 at the time. We go down to 100. The next step is 95, and 95, the gap between 100 and 95 is nothing, right? That's nothing. But at 95, 65% of all the invested wealth in Bitcoin is underwater. And from there, it's a very quick trip down to 80. So I just laid out the framework and go, look, I don't know how this plays out. None of us do, but it doesn't look good.
Yep.
Once you're at 110, the trip to 100 is not far. Once you're at 100, the trip to 95 is not far. And once you're at 95, you're going straight to 80. So it's like your risk curve exponentially increases. The lower we go below 110, the more that risk is just ratcheting up to an unrecoverable scenario. And that's more or less how it played out.
Yeah, no, 100%. If this, then that scenario.
Totally.
If we're going to flip this on its head just before we finish up, James, is what would make you get renewed confidence in Bitcoin flipping from this fundamental bear, but maybe not a price bear, into a bull? I know we've got the true mean holding us at below us, which is actually confluent with the 100-week moving average, but above we've got the short-term held or cost basis. Is that maybe your if this then that type scenario?
Pretty much. Yep.
Yeah.
I would actually, the most bullish thing I can possibly think of, truthfully, is we actually hit a lower high right now at the short-term cost basis or 100K or something like that. I would love to see us hit a lower high and then have a really nasty waterfall sell-off straight below 80, right? And everyone's you can imagine the smell. Oof. And I know people are going to hate it. But this is actually, in my opinion, the most bullish scenario. Down below 80, everyone goes, oh man, it's over. They chuck in the toys, the bulls leave, the bears go max short. And then we get this big ass hammer candle back up to 100, back up to 95. You get something like that. And it is like, if you're a bear after that happens. Now, by the way, if it goes down below 80 and stays there, obviously it's over, right? Now we're going, yeah, exactly. So again, you got to think about these things in advance, but like, the second we go down into the 80s again, I am two hands jumping into this thing because if we get that hammer candle back up, we're on all-time highs, and it's gonna happen quickly. So that's my general base case. So I'm pretty much 50%. My risk position is MSTR and a little bit of Metaplanet for this cycle. Always has been. I got out of MSTR at $300 when I wrote on the cusp,
nice.
And now we got down to 158. I was like, I think it's like MNAV's one, everything's cooled off. So I took in half my position. So I'm basically half allocated in terms of my risk position. My Bitcoin dollar DCAs just every day, just churning away. And honestly, I probably won't turn that thing off until we get to 110, something like that. So I'll just keep plugging away daily DCAing. And, if we go back down to 80, I'll probably just empty whatever I've got and happy days.
You're a good man. Yeah, I'm buying MicroStrategy. I think I saw it 0.08 MNAV. I'm like, geez, this is a no nonsense sort of buy here.
I know, like literally, what 670 something thousand Bitcoin.
Yeah, either your thesis needs to be that MicroStrategy is bankrupt and it's going to zero, or it's
Bitcoin's dead.
it's bottom, yeah, or you buy it essentially. Sorry, I know I said that was the last one, but when we were talking about alts before, and I just wanted to get your very quick view on something like XMR Monero. It is broken out of, let's say, a 10-year consolidation, private crypto coin. Is there
Yep.
anything there that I guess? What are your thoughts on Monero? What do you think about privacy going forward? I know there's been some talk around Bitcoin with the privacy and the transactions, but hasn't really come to fruition. But
Yep.
where are you sit on that?
Yeah. So I mean, like fundamentally, I actually think Monero is one of the very, very few crypto assets that I would put in the bucket that is not a scam. Monero is just the cryptography there is incredible. So I've long been a fan of Monero. I don't hold any. I've held some in the past. I know why people own it. As an Australian, it's basically impossible to buy because any exchange that has Australian dollars, the banks have just shut it down. So all the reasons that you would want to own it
Mm.
is the reasons why you'd want to own it. I look, I'm of the view that this is most likely an illiquid asset that is good quality. Like I'm not going to say it's not. It is good quality, but the problem is, how would I use it? Because I know, like, let's be real here. No one's accepting Monero for stuff. Like, if you're buying drugs, yeah, but if you're
Except
not,
for illicit, yeah, things. Yeah.
like those days are well and truly behind me now. So I'm not that phased about that part of the market. So like for me, I just can't quite see why I would hold it as a store of value. I understand the privacy side of the equation. Gold kind of is that. Like if I really wanted something private, I'd actually kind of rather not touch a digital exchange with my passport and
Cash.
like
Yeah.
exactly the problem. The actual problem with Monero is that it's private up until the point when you try to use it. The moment that you try to use it, you're sending it to an exchange. And then suddenly you're like, oh yeah, I'm just going to like take my super private hidden thing that I can't spend anywhere because no one actually accepts Monero for anything except drugs. So therefore I'm going to just go on to a KYC exchange. And you're like,
Yeah. They knock on your
but
door. You got some RPGs in your bedroom.
yeah.
Yeah,
So,
we'll wake up, mate.
and by the way, I'm also, and I say this full well knowing that privacy is a big issue for Bitcoin, right? It's a huge risk. It's one of the big risks that I think exists and is real for Bitcoin. So this is not to diminish that side of the equation, but I also think let's just be really pragmatic and practical here. I don't think that these privacy coins are pumping because suddenly the world has discovered that it likes privacy. History has shown that sadly, incorrectly, but factually, the world just doesn't care. The average person just doesn't care. And that's a problem. Like that is a problem, but that's not a problem with the coin. It's a problem with society. We prefer convenience over anything else. I mean, like every single person is like so unbelievably surveilled and tracked in the digital world. The challenge with privacy coins is that every time you use them, you're going to make a mistake. The coin can do whatever it wants. And Monero's done a fantastic job of being private. Unfortunately, the average person ain't ever going to be able to do that.
Yeah, 100%. So gut feel this year, mate, your all-time high. What do you think?
I think it's possible. I do think it's possible. And very simply, Bitcoin hasn't run like everything else, which means the slingshot is just pulled. It's just pulled. As we've said, it's gone through this own like internal digestion period after getting twice as many Christmas presents for 4 years in a row. Once that slingshot goes, I mean, like the stage is just set. So yeah, as with all things, it's a game of patience. And yeah, my daily DCA is just chugging away because I'm going to take these prices all day.
You're a star. Thank you for your time, mate. I love these sessions. Where can people get in contact with you and follow your work?
Yeah, so you'll see us over at checkonchain.com. We've got our Substack and our charting platform, which will very soon, by Q1, end of Q1, hopefully getting a very significant overhaul.
Amazing. Thank you for sharing, mate. Appreciate your time. Thanks for
Good on
joining.
you, mate.
Cheers, bud.
Cheers.